Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. Indian rupee sinks to a new low against the dollar. $1 now costs nearly 90 rupees as foreign fund outflows and uncertainty over the India-US trade deal hurt sentiments. Sensex and Nifty end marginally in the red after hitting record highs in early trade. Stormy start to winter session of Parliament. Government tables two bills to levy higher excise duty on cigarettes and tobacco products, along with a new cess on manufacturing of pan masala. The new cess bill gives the government the power to hike rates and add other items to expand taxation. Nearly a dozen economy-related bills on the agenda this winter session. This includes bills to hike FDI on insurance to 100%, bankruptcy law amendment, and opening up civil nuclear energy sector to private companies, among others. The government is awaiting a formal request from Vodafone Idea seeking AGR relief, says Telecom Minister Scindia after the Supreme Court ruling. Also adds any other company seeking AGR relief must approach the top court when asked about Bharti Airtel. That's an exclusive. Telecom Minister asserts that there will not be any pause to the new SIM binding rules, which makes a SIM card mandatory to access apps like WhatsApp, Telegram, among others. Scindia also defends a proposal to mandate government's cybersecurity app Sanchar Sathi on app smartphones, says directives will be issued to phone makers in a couple of days. Mahindra & Mahindra, Bajaj Auto meet estimates with November sales. Commercial vehicles see a strong pickup, with Mahindra, Escorts and Ashok Leyland reporting double-digit growth. Vietnamese electric vehicle maker VinFast, all set for the India Drive, will launch a 7-seater multi-purpose vehicle called the Limo Green by February. Also plans to roll out its full fleet from bikes to buses in a few years. Just a day after fixing a software issue, Airbus faces a new quality problem. The suspected production flaw is causing delays to several A320 aircraft deliveries. There is no indication that this problem has reached the aircraft already in service, according to a Reuters report. More than 1,100 people have been killed across Indonesia, Sri Lanka and Thailand as storms and floods devastate the region. Death toll in Indonesia crosses 600, with 500 more people still missing. More than 350 people killed in Sri Lanka, with 366 still missing. The top story this evening, the Indian rupee hit an all-time low of 89.7 against the US dollar today, nearing the $90 mark. The currency has depreciated nearly 90 paise since November 3rd. So how does one really explain the fall of the rupee? Dealers say that the RBI restricting the supply of dollar could be one of the reasons. Ritu Singh joins us now with more. Ritu, what are you picking up?
Well, the Indian rupee slipped to a fresh record low today, hovering around 89.7 to 89.8 to a dollar, slipping past the previous record low of 89.49 that was hit just 2 weeks ago. Now, with this, the rupee ranks among Asia's worst performing currencies this year, despite the resilience that we've seen in economic fundamentals. And these losses would have been even larger had it not been for RBI's intervention at regular intervals. Now, the fact that this slide is coming after those stunning second quarter GDP numbers is what's got everyone talking. So what's really going on? Well, this is a mix of the persistent capital outflows and, more importantly, the lack of a trade deal with the US that have continued to weigh on sentiments. Now, the rupee has been under pressure more recently since India reported a widening trade deficit at $41.7 billion for October, the highest ever. Meanwhile, foreign portfolio outflows have continued. Just $425 million last month alone was sold. Even that 8.2% real GDP growth offered not much relief because the nominal GDP has cooled to single digits, and that signals that domestic demand is probably not as hot as headline numbers are suggesting. So why is the rupee weakening more than some of its Asian peers is the question. Well, markets describe it as a kind of a perfect storm for India. On one hand, Indian equities are expensive, compared to some of their other peers, and that limits the fresh foreign inflows. And India also doesn't have the export tailwinds from any AI advantage or trade pact deal that some of the competitors in other countries enjoy, and that makes the country unattractive for foreign investors too. And unlike many other Asian economies, India is also now simultaneously running both a current account gap and weaker capital account inflows, which is a double whammy. In fact, our capital account has been in deficit for 2 consecutive years years now for the first time since 1991. Now, typically what would happen is the current account deficit would be funded by the capital account surplus. So there was no worries there, but now the capital account is in deficit. That is also hurting sentiment. So it's a combination of structural external pressure, weak capital flows, a steep trade deficit and global dollar strength. And until capital inflows resume or external imbalances narrow, the rupee looks vulnerable. And experts we've been speaking to say that the 90 per dollar level is now more than just psychological. It may be on the cards soon.
And some encouraging news for the money market tomorrow. India's current account deficit has narrowed to just over $12 billion in the July to September quarter. This is below estimates from several economists, which had pegged the deficit above $15 billion. This is also much less than the $20 billion deficit clocked in the same period last year. The fall in the Indian currency weighed on Dalal Street as well as benchmark indices hit record highs in early trade, but selling pressure in late trade meant Sensex and Nifty ended marginally in the red. The mid-cap index managed to hold its head above the water. The other big story this evening, the winter session of Parliament has gotten off to a stormy start. The opposition is uniting on the issues of special intensive revision of voter rolls, the Red Fort car blast and the air pollution in Delhi. Lok Sabha was adjourned today amidst sloganeering by the opposition lawmakers. The government says SIR is an election commission-led exercise and it cannot take primary responsibility. However, the government suggested widening the discussion to broader electoral reforms. There were fireworks in the Rajya Sabha as well. Congress President Kharge hit out at the Prime Minister for his statement ahead of the parliamentary session, taking a jibe at the opposition. Prime Minister Modi said that the parliament is not a place for engaging in drama.
ड्रामा करने के लिए जगह बहुत होती है, जिसको करना है करते रहें. यहां ड्रामा नहीं, डिलीवरी होनी चाहिए. नारे के लिए भी जितने नारे बुलवाने हैं वो पूरा देश खाली पड़ा है. जहां पराजित होकर के आए वहां बोल चुके हो, जहां अभी पराजय के लिए जाने वाले हो वहां भी बोल दीजिए.
प्रधानमंत्री बाहर बहुत जोरदार तकरीर करके आए और अपना प्रेस कॉन्फ्रेंस करें और हमारे ऊपर भी बहुत इनडायरेक्टली हमला किए, लेकिन उसका जवाब तो हम मुंहतोड़ यहाँ पर देंगे.
All right, let's move on and get you more news from around the country. The government has tabled 2 bills to levy higher excise duty on cigarettes and tobacco products, along with a new cess on manufacturing of pan masala. The new cess bill gives government the power to hike rates and add other items to expand the taxation. Timsi Jaipuriya is here with more.
Well, Finance Minister has tabled the Central Excise Amendment Bill 2025 and Health Securities and National Security Cess Bill 2025. The 2 bills aim to change the composition of indirect tax levies on tobacco products and pan masala. Under the Central Excise Amendment Bill first, well, Centre proposes here to realign excise duty on cigarettes, cigars and tobacco products like gutka. The excise on cigarettes to vary from 2,700 rupees per 1,000 sticks to about 11,000 rupees per 1,000 sticks, and the excise collections do get collected in the divisible pool, so states do get the share as per the Finance Commission's sharing formula of the revenues. When it comes to the changes, well, they'll kick in post the discharge of the back-to-back loans taken to compensate the states on the COVID losses on account of GST, and the new rates after these changes come into effect will be 40% of GST plus the excise duty. That's it. No more compensation cess or any other cess will be on cigarettes, cigars or these chewing tobacco products. When it comes to health and national security cess, that is proposed on pan masala only. Again, this will be levied on the production capacity and the collections will not be shared with the states over here. Centre is very clear that they will use this fund for the purpose they are collected for, that is for health and for national security. Also, government reserves the right and power to notify a hike in the rates of these 2 cesses anytime, whenever they feel, and also an enabling provision that gives government the right to add any other item to the list on which these 2 cesses can apply. As of now, it will apply only on pan masala. And again, once the back-to-back loans are cleared, the changes on the pan masala will be that there will be a GST hike from 28% to 40%, and the remaining, there will be no compensation cess. Only cesses, the 2 cesses, that is health and national security cess, will come into play.
The government has also lined up 7 key bills ranging from insurance reforms to amendments in the Insolvency and Bankruptcy Code. Shivani Bazaz now joins us with more details. Shivani, take us through the key economic bills that will be tabled during this session.
Well, absolutely. Parliament's winter session opens with a sharp reform push, with the government bringing some of the most important economic amendments forward. The focus this time is on faster resolution, smoother infrastructure development, stronger market regulation and lighter compliance as well. 14 bills in total slotted for this session. The Insolvency and Bankruptcy Code Amendment Bill that aims to tighten timelines, cut NCLT delays and bring clearer rules on creditors' priority and distribution. All this making the insolvency resolution quicker and more predictable in India. Next up, a major structural reform comes through with the Securities Market Code Bill, which merges SEBI, SCRA and depositories laws into a single code, creating one rule book for markets and strengthening enforcement. The next bill is the Corporate Law Amendment Bill that focuses on simpler compliance and stronger disclosures. It removes outdated penalties, smoothens filings and aims to make company operations more transparent and business friendly. Then the next is the Insurance Law Amendment Bill that proposes raising FDI to 100%, introducing composite licenses and easing capital norms for new insurers, aimed at attracting foreign investment and deepening India's insurance footprint. Next up is the National Highways Amendment Bill with updated rules for land acquisition, right of way and concession agreement, giving NHAI more flexibility to speed up highway construction and settle disputes faster. Then another important bill is the Atomic Energy Bill that seeks to modernize India's nuclear framework with updated safety, licensing and waste handling norms, aligning the sector with the global standards and new technology. And then, of course, last but not the least is the Jan Vishwas Amendment Bill that continues the government's push to decriminalize minor offences and reduce everyday compliance burden on MSMEs. Now, a high-impact legislative session that way, with reforms designed to make India's financial and corporate ecosystem faster, simpler and more investment-ready. Back to you.
The government has sought Parliament's approval for additional expenditure of 41,500 crore rupees for the current fiscal year. Sapna Das has the details.
Well, 1.32 lakh odd crores is what the government is seeking in terms of gross additional expenditure from the Parliament, but the net number is going to be much lower, just around 41,500 odd crores. This is not even 0.12% of the GDP. Not a big impact or not a big worry for the fisc as of now. Having said that, in terms of the major items of additional expenditure, one, of course, fertilizer subsidy. The government is going to give additional 18,525 crores to the sector, to the fertilizer companies, primarily because the fertilizer prices are going up in the international markets. Import prices have gone up, and to that extent, the sector needs to be compensated. The second, of course, is going to be the petroleum subsidies. Around 9,500 odd crores is what the government is indicating via the supplementary demands for grants. Now, if you recall, way back in August, the cabinet had given a nod for 30,000 crores worth of cash compensation to the oil marketing companies for their LPG under recoveries. I suppose the first big tranche, around 9,500 odd crores, is not going to come through. All in all, as I just indicated, impact on the budget is hardly going to be 0.12% of the GDP, which is not a worry as of now.
On to a CNBC TV 18 exclusive now. Telecom Minister Jyotiraditya Scindia has said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. When asked about Bharti Airtel, Scindia clarified that any other company seeking AGR relief must approach the top court. He also asserted that there will be no pause to any SIM binding rules which make a SIM card mandatory to access apps like WhatsApp, Telegram, among others. Scindia defended the proposal to mandate government cybersecurity app Sanchar Sathi on app smartphones, saying that directives will be issued to phone makers in a couple of days.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
This is with regard to the SIM binding initiative that you've just launched. And this is for all messaging apps such as WhatsApp, Telegram, Signal. All of them have to comply with the SIM binding norms within 90 days. Why has this been done? And what is the larger intention? Because the industry is saying that there should be a pause on this for some time to allow for wider consultation.
In the last fiscal alone, people across the length and breadth of our country have lost close to 22,800 crores to cyber fraud. It is my responsibility as telecom minister to protect my consumers. And this indeed is a step towards that. As far as consultation is concerned, we've had 5 to 6 rounds of consultation, starting in early April, into June, latest even close to November. Across the board, there has been a clarion call for this.
The next question, there are reports coming in that the Telecom Ministry has asked private mobile phone makers to preload a government-owned cybersecurity app before selling phones. Now, this is for the security of customers all around the country. Has that been done? Have the directions been issued? And what exactly is the expectation?
So all of this ties in with the security of the customers. So Sanchar Sathi portal and the Sanchar Sathi app has done a yeoman service. And let me say this on television with you, and let me thank our consumers also, because the success of this could not have been possible unless there was a Jan Bhagidari approach. And it is due to that Jan Bhagidari approach that we've been able to protect our consumers. This is a step in that very direction. If you're able to load this on, then if I lose my phone, immediately that app is on my phone, which I can then register and make sure that my phone is not used by any fraudulent individual. It's a step to protect the consumers at the end result.
And the minister also shared his plans about making India Post a public logistics giant. You can catch that entire conversation with Telecom Minister Jyotiraditya Scindia at 9:30 p.m. right here on CNBC TV 18. And coming up on India Business Hub, Vietnamese electric vehicle maker VinFast, all set for the India Drive, will launch a 7-seater multi-purpose vehicle called Limo Green by February next year. More details in just a bit. And you can also catch all CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Do subscribe to CNBC TV 18 Access for exclusive stories. Gold prices hit a 6-week high, lifted by expectations of a possible US Federal Reserve rate cut later this month. Silver extended its rally after touching record highs, driven by Chinese inventories falling to decade-low levels and a surge in China's silver exports, which hit an all-time high in October. India's industrial output rose less than 1% in October, registering a sharp drop from 4% in September. The government has attributed the slowdown to fewer working days during the month due to Diwali and Dussehra. Mining output fell by over 1%, while manufacturing rose nearly 2%. Electricity generation dropped nearly 7%, largely because of the lower demand due to extended rainfall and cooler temperatures across the country. India's factory output has eased to a 9-month low in November. This can be attributed to export pressure and lower rise in sales. This has also been the slowest improvement in operating conditions since February. GST collections in November came in at 1.7 lakh crore rupees. Remember, this was the first print for the entire month post the new GST reforms, which eliminates a cess component. India's auto sales slightly beat estimates in November. Commercial vehicles witnessed a strong pickup during the month, and this can be attributed to strong festive season and reduction in GST rates. In the two-wheeler segment, TVS Motors registered a 30% growth on an annual basis, while Bajaj Auto sales were in line with expectations. Mahindra's auto business continued to see healthy demand, and its tractor business registered 32% growth. Vietnamese EV giant VinFast is expanding its presence in India. The company plans to launch the 7-seater multi-purpose vehicle called Limo Green by February next year. The company's CEO told CNBC TV 18 that EV penetration in India has multiplied this year.
The experience is fantastic. We are very happy about the response of the market of India. Before last year, the penetration of EV into Indian market is very less. But since this year, it's multiple. It means that the future of EV in Indian market is huge. And someday it will be a very, very big number.
We told you first, and now it's official. The government will divest up to 6% stake in Bank of Maharashtra. It would be selling 5% stake via the offer for sale route. The floor price has been set at 54 rupees per share, which is at an over 6% discount to today's closing price. Further, the government may offload an additional 1% stake in the bank through a green shoe option. The offer for sale will open tomorrow for non-retail investors and on the 3rd of December for retail investors. The Enforcement Directorate issued show-cause notices to Kerala Chief Minister Pinarayi Vijayan last month over alleged foreign exchange violations linked to the masala bond issuance in 2019. Notices were also issued to the state's former Finance Minister Thomas Isaac and Kerala Infrastructure Investment Fund Board CEO K.M. Abraham. However, the notices do not require personal appearance of those named. Shares of Lenskart rose in trade after company reported a solid set of numbers in the second quarter. This is the eyewear brand's first earnings announcement since it listed earlier this month. Net profit jumped over 19%, while revenue surged over 20% on an annual basis. On a sequential basis, margins expanded 180 basis points, while EBITDA rose over 23%. Airbus says that of the 6,000 aircraft potentially affected by its recent safety alert and possible flight control system malfunctions, the vast majority have already received the required modification. The company is now working with airline customers to complete upgrades on fewer than 100 remaining aircraft so they can return to service. Meanwhile, Indian carriers have successfully completed the critical software upgrades on 323 Airbus A320s across their fleets. And just a day after fixing a software issue, Airbus faces a new quality problem. The suspected production flaw is causing delays to several A320 aircraft deliveries. There is no indication that this problem has reached the aircraft already in service. According to a Reuters report, Airbus shares tumbled in trade today. Sri Lanka reels from the after effects of Cyclone Ditwa. As per reports, the death toll has crossed 350. The president has declared the nationwide flooding as the largest disaster, with deaths reported in more than half of the country's 25 districts. As per an initial assessment by the UN, more than 15,000 homes have been destroyed. And it's not just Sri Lanka. Heavy rainfall fueled floods and landslides battered large parts of Indonesia, Thailand and Malaysia, killing close to 1,000 people. Indonesia has been the worst hit. Close to 3 million people have been impacted in Thailand, with the Songkhla province being the worst hit. The official death toll now stands at 170. 8 states in Malaysia have been impacted. As per report, at least 3 people have been killed. Here's more.
As floods recede and reveal the trail of destruction left by torrential rains in Indonesia, Thailand and Malaysia, officials have reported a rising death toll. That is in the wake of a rare tropical storm formed in the Malacca Strait, unleashing devastating downpours and powerful winds which lasted for a week across Southeast Asia. By Monday, officials had reported more than 500 dead in Indonesia, over 170 in Thailand, and several in Malaysia. In Indonesia's West Sumatra province, a wall is all that's left of one family's home after cyclonic rain struck the region.
Ini rumah saya, rumah pribadi.
This was my home. I have 9 of my family members here. We have nothing left. Everything was gone. We only have the clothes on our backs. We couldn't bring anything else.
Rescue and aid efforts are struggling to reach parts of the province as landslide debris blocks roads and communication and power lines remain down. In southern Thailand, residents in Hat Yai have started to clean up after a week of downpours, which left piles of cars stuck on roads and muddied homes and businesses. Some shop owners resorted to selling heavily damaged goods at big discounts. In Malaysia's northern Perlis state, paddy fields look like the sea as non-stop rain submerged stretches of land. One farmer said the rains have completely ruined his fields. Relief and rescue efforts continue across all 3 countries. But with hundreds still missing and millions affected, the region faces a long road to recovery.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues on CNBC TV 18.